Activision Blizzard is one of the largest video game companies in the world, valued at over $45 billion at the time of this video. Activision Blizzard owns some of the most iconic video game franchises in video game history, including Warcraft, Starcraft, Call of Duty, Diablo, Destiny, Candy Crush, and the recently released and wildly popular first-person shooter, Overwatch. For me, Activision Blizzard is kind of like the Disney of the video game industry. Like Disney, Activision Blizzard has built a ravenous fan base for its video game characters and fantastical worlds. Now, if only Activision Blizzard built a World of Warcraft theme park. Let's dive into their 2016 annual financial report, which was released in February 2017, to see how Activision Blizzard did financially for the year 2016. Net revenue totaled $6.6 billion, a 41.6% increase from 2015's $4.7 billion in net revenue, which itself was a 5.8% increase from 2014's total net revenue of $4.4 billion. It should be noted that Activision Blizzard's 2016 financial results include the operation of King, the maker of Candy Crush and other mobile games. King was acquired by Activision Blizzard on February 23, 2016 for approximately $5.8 billion. The incorporation of King's operation partially explains the large increase in net revenue for Activision Blizzard in 2016 when compared to 2015's net revenue results. Total costs and expenses for 2016 total $5.19 billion, a 55.3% increase compared to 2015's total cost and expense of $3.34 billion, which itself was a 3.7% increase from 2014's total cost and expense of $3.22 billion. Activision Blizzard attributes a large increase in costs and expenses in 2016 when compared to 2015 to increased game operations and distribution costs associated with King titles, like Candy Crush. Game operation and distribution costs jumped from $343 million in 2015 to $1.32 billion in 2016, a 284% increase. This gives Activision Blizzard an operating income of $1.41 billion for 2016, an increase of about 7% when compared to operating income of $1.31 billion for 2015. Net income totaled $966 million for 2016, an increase of 8.29% compared to net income of $892 million for 2015. Now let's take a look at how much income each business segment contributed to Activision Blizzard's income. Activision contributed $788 million in income for Activision Blizzard in 2016. The Activision business segment is down quite a bit when compared to the $868 million in income it generated in 2015. Activision Blizzard contributes the decline to lower sales of Call of Duty Infinite Warfare released in 2016 compared to Call of Duty Black Ops 3 released in 2015. 2016 also only saw one expansion released for Destiny, compared to 2 expansions released in 2015. 2016 release of Skylander Imaginator was also not as successful as the 2015 release of Skylander Superchargers. Activision Blizzard's Blizzard business segment contributed $1.01 billion in income in 2016, compared to $561 million and $756 million in income for 2015 and 2014. Activision Blizzard attributes the significant jump in 2016 income for the Blizzard business segment to the wildly successful launch of Overwatch, which has recently surpassed 30 million players, and the World of Warcraft expansion Legion, which many attribute to reigniting interest in the sluggish World of Warcraft franchise. The King business segment contributed $537 million in income, primarily from the Candy Crush franchise. This is the first year King operation has been incorporated into Activision Blizzard's financial results, so we have no previous year to compare to. Revenue from digital distribution channels continued to pick up steam in 2016 when compared to retail channels. $4.86 billion in revenue from digital online channels and $1.38 billion in revenue from retail channels. Revenue from digital online channels in 2016 exploded by 94.4% when compared to 2015. $4.86 billion versus $2.5 billion. The increase in digital sales was primarily due to King titles, such as Candy Crush, which are digital only. Retail channels continue its slide in relevance. $1.38 billion in revenue in 2016 compared to $1.8 billion and $2.1 billion in revenue for 2015 and 2014. It's important to note that revenue from digital channels include microtransactions, digitally distributed subscriptions, and downloadable DLC. Now let's take a look at net revenue by geographic region. Activision Blizzard segments its market by 3 different geographic regions: Americas, EMEA, Europe, Middle East and Africa, and Asia Pacific. Revenue from Asia Pacific, while smaller than the other 2 regions, has been growing at a rapid pace. 34.75% annual compounded growth rate from $394 million in 2014 to $964 million in 2016. Revenue from Asia Pacific has grown from 8.9% of revenue for Activision Blizzard in 2014 to 14.58% of revenue in 2016. This increase came at the expense of EMEA, which only contributed 33.6% of revenue compared to 41.3% in 2014. The Americas saw relatively no change, 51.8% of total revenue in 2016 compared to 49.6% in 2014. Now let's take a look at a metric that Activision Blizzard deems as important to its financial results: monthly active users, which Activision Blizzard defines as the number of individuals who play a particular game in a given month. An individual who plays 2 of our games will be counted as 2 users. One can see why Activision Blizzard is paying particular attention to its monthly active user numbers. The more monthly active users, the more engaged its fans are with its properties, which means more chance to sell DLC, microtransactions, expansions, merchandise, and future video game titles. For the 3-month period ending on December 31st, 2016, the Activision business segment contributed 51 million monthly active users. Blizzard contributed 41 million monthly active users, and King contributed a whopping 355 million monthly active users, more than the combined total of the other 2 business segments. However, total monthly active users for the 3-month period ending on December 31st, 2016 is down 15.6% when compared to the same period in 2015. Blizzard gained 15 million monthly active users between the 2 periods, probably due to the success of Overwatch and the World of Warcraft Legion expansion. Activision lost 4 million monthly active users, and King lost a whopping 94 million monthly active users between the 2 periods. King titles will continue to face an uphill battle for users in the hotly contested mobile market, as Activision Blizzard themselves noted that the top 10 mobile games on the Apple App Store and the Google Play Store only have a tenure of 24 months. And this leads to one of Activision Blizzard's weaknesses: you're only as good as your last video game hit. By Activision Blizzard's own admission, a majority of its income is concentrated in a handful of video game franchises. A significant portion of our revenues has historically been derived from video games based on a few popular franchises, and these video games were responsible for a disproportionately high percentage of our profits. For example, the Call of Duty, Candy Crush, World of Warcraft, and Overwatch franchises collectively account for 69% of our consolidated net revenues, and a significantly higher percentage of our operating income for 2016. The continual financial success of Activision Blizzard relies on their ability to continue to generate hit video games that engages consumers for an extended period of time. Candy Crush, Call of Duty, and World of Warcraft have been on a downward projection for a while now. Activision Blizzard has stopped reporting World of Warcraft subscription numbers in 2015, when subscription numbers fell to 5.5 million subscribers, down from over 12 million subscribers. The newly released World of Warcraft expansion, Legion, seemed to have renewed interest in the long-running MMO, but it's to be seen if Activision Blizzard can recapture World of Warcraft's former glory and subscription numbers. The Call of Duty franchise is also not the same gaming juggernaut it once was. Activision Blizzard admitted sales of Call of Duty Infinite Warfare was lower than Call of Duty Black Ops 3. The initial release of Diablo 3 with its real money auction house turned fans away so harshly that it may have destroyed, or at the very least tainted, the Diablo franchise. When you rely on just a few franchises, a few missteps or poorly received video games can spell financial disaster for the video game giant. When it comes time to sunset the Call of Duty franchise and World of Warcraft, will Activision Blizzard be able to create new video game franchises to replace these highly lucrative revenue streams? That's the billion-dollar question. Activision Blizzard has taken steps to diversify its earnings with the release of Destiny and Overwatch, 2 new video game IPs, and new video games based on existing video game IPs, Hearthstone and Heroes of the Storm. One of the motivators of acquiring King was diversification of earnings. Looking forward, Activision Blizzard is looking to take advantage of a hot new burgeoning industry, esports. To quote Activision Blizzard CEO Bobby Kotick, "To broadcast the organized competition we are creating, we are building MLG.TV into the first dedicated channel for professionally produced esports and the adjacent content that celebrates and recognizes our players for their accomplishments. We liken this to the ESPN of video games." Bobby Kotick continues by expounding the advertising potential of esports. "We are also working on an advertising model fit for that future. The quickly growing esports audience includes some of the hardest to reach and most sought after demographics, with a share of millennials 2 to 3 times higher than any of the big 4 US sports. We will be able to provide advertisers with direct access to these fans and better targeting and analytics than traditional forms of advertising." Other giant technology companies have begun to position themselves to take part in the growing esport industry. Amazon acquired the popular video game streaming site Twitch for $970 million in 2014, and Google has launched YouTube Gaming in 2015. Activision Blizzard is uniquely positioned in the competitive esports scene. They own both the video game franchises and the streaming services and organized leagues. However, Activision Blizzard's esport franchises such as Heroes of the Storm, Starcraft 2, and even the wildly successful Overwatch pales in comparison to other established esport franchises, such as League of Legends, Dota 2, and Counter-Strike. Activision Blizzard has famously missed the boat on the MOBA phenomenon. Ironic given the fact that the MOBA originator, Dota, began as a mod for Warcraft 3, an Activision Blizzard franchise. Activision Blizzard released its own MOBA, Heroes of the Storm, in 2015, after Dota 2 and League of Legends already established themselves as the premier competitive MOBAs. Heroes of the Storm continues to play catch-up. Activision Blizzard do have the financial resources, quality video game franchises, and technological infrastructure to be successful in the esport arena, but as of 2016, MLG TV or Major League Gaming TV doesn't contribute anything to Activision Blizzard's bottom line. Activision Blizzard CEO Bobby Kotick is optimistic. "The size of the opportunity ahead for us is vast. Around 240 million people watch around 7 billion hours of NFL content annually, generating $12 billion in revenues including $6.1 billion in media rights revenue. The NBA has 176 million viewers watching 2.1 billion hours each year, creating $5.2 billion in revenues and $1.8 billion in media rights. There are now around 450 million players in our community. More than 40 billion hours were spent playing our franchises last year. A record 3 billion hours were spent viewing our games."